Hello, hello. I'll allow a few minutes for people to file in. Um, Thank you all for coming, and let's give a few minutes, and then I'll jump into the content. Okay, we'll get started, and those who will join us later will catch up. Thank you all for taking time to attend our webinar about some of the insights we've gathered from the application phase of the Pure Growth Fund. I'll just run through a quick agenda and introduce myself. My name is Andrew Lobis. I work at REEEP as a lead expert for energy access. And today we're going to talk a little bit about just some information on the Pure Growth Fund, some of our philosophy, and how we've actually selected some of the firms in this application round. We'll talk a little bit about the results from the evaluation, what we found, who has applied, what types of organizations, and a little bit of the geography and complexion of these firms. We're going to talk about what's next for the Pure Growth Fund, some of the timelines and what we're planning to do in the future. And then there's something we're going to ask you of in the end, the participants who are so kind as to speak today. And we're going to round off with a question and answer session, which my colleague Aaron will walk us through, and we'll be doing some Q&A, and we'll have ample time for that at the end. So let's do a quick general overview of the first funding window. The Pure Growth Fund is planned to be a multi-country fund with several different funding windows, but our first funding window was focused on Tanzania, and it involved 2.5 million euros of incentive capital. We're looking to deploy this incentive capital to clean energy SMEs and agribusinesses. And this incentive capital is deployed using a reverse auction mechanism. Some of you may be familiar with this terminology. Essentially, applicant organizations present a plan of how they're going to impact the market. Their plan is judged all for its value for money based off of several different factors, which we'll discuss later. And those with the best value for money are ranked highest. And then we do assessments of the companies thereafter. So companies are essentially offering impact to us, and we're looking to whom we'd want to essentially purchase that impact from, hence the idea of a reverse auction in which we're the only buyer and there are several sellers of impact. So this program itself will not only involve the deployment of this incentive capital we mentioned, but we're combining some other strands. We're going to be providing technical assistance to beneficiary companies, mostly in-house, although we'll use some expertise externally. We're looking to do quite targeted engagement of the public sector to help articulate the concerns of private sector companies to public sector actors. And the last thing we're going to be doing is gathering data from participant firms, synthesizing this and using this to inform our future philosophy and approach. Given that there is a focus on agro value chains, we're going to be working with applicant organizations and our eventual beneficiaries to look at risks in these value chains. We've taken a value chain agnostic approach. So that is to say, we're not focusing on just milk or horticulture. We're looking through several different potential value chains, but whatever value chain the organizations have selected, we're going to work with them to help ensure that they are having capacity to work through risks in these value chains, whether that's from the customer base up to sellers. We're trying to take a whole approach to ensure that these value chains are functioning as smoothly as possible. We're looking to sign contracts for 3 years. And as you can see, the contract amount is between €250,000 and €1 million of incentive capital. And last but not least, applicants must be for-profit companies. Those organizations leading applications need to be for-profit companies. They can partner with nonprofit organizations in a consortium, but we're mostly looking to deploy through for-profit companies. And as noted here, these companies should be able to demonstrate some co-financing so that they can increase their impact on the market in addition to the incentive capital that we're providing. Last but not least, very importantly, the Federal Ministry of Agriculture and Forestry, Climate and Environmental Protection, Regions and Water Management of the Republic of Austria is very generously supporting this Pure Growth Fund, and we must acknowledge their support throughout all of this. So just a quick explanation of what we're actually doing and how we're working. We are taking a wide view of eligible technologies. There will be several different types of technologies that are eligible for funding in the Pure Growth Fund, and we've had applicants, as you will see later, that span the wide gamut of technological modalities. You can see here we're looking at everything from production, so those elements that increase agricultural productivity, storage, cold storage, processing of all different types, both small and large scale, clean transportation, and last but not least, bioenergy. So we will discuss a little bit about how we've approached the weighting of these technologies, but just to say, for this funding round, we have taken quite a wide aperture on the different technologies we're accepting to support, and we've actually seen an interesting variety of technological applications. So I want to speak a little bit about the basis for selection and our philosophy. So like many organizations, we have kind of split our analysis of potential applicants into two main lanes. The first focuses on the operation, what we call the operational readiness of an applicant. This looks at their business plan, things like, do they have a fit between the product and the market? Do they have unique selling points? How are they established on the ground? Do they have logistics pathways, et cetera, et cetera? Essentially, what makes the business tick? What is their strategy? How have they grown so far? What are their plans for the future? What are their capacities as an organization? All of this is examined under the heading of the business plan. That is examined, obviously, during our assessment and later in due diligence, just to understand those elements of the business, how they work, and gather more information than that which the company was able to articulate in the application. There's another variable that we have assessed at the outset and will continue to assess, which is what we call the Pure Impact Index. So many of you may be familiar with energy access programs. We from REEEP can give the example of the Beyond the Grid Fund for Zambia, which in collaboration with the Embassy of Sweden, we developed in Zambia. The primary measure for the Beyond the Grid Fund of Zambia was the number of connections deployed to households, businesses, and institutions. We were tracking how many households, businesses, and institutions gained clean energy access over the course of the program. And that was essentially the determinant of whether we had success or failure from a certain applicant over the program itself. We're mostly measuring the connections. But many of you know that this analysis of connection can be less useful in a context of productive use of renewable energy because you can have technologies that are very small, like a backyard solar dryer, and then you can have a single piece of technology that is essentially a cold room the size of a shipping container, right? Both of these are one piece of technology. So rather than measuring the amount of technology deployed, we wanted to kind of understand what this technology did. And I proposed, and we had worked through as a team, how to measure essentially the potential of these technologies to generate income. We're not exactly looking at the precise income generation figure, as you all know, this can be very hard to understand, but we've tried to use as a philosophical North Star what guides us and the way we're kind of analyzing the potential impact of these technologies is how can deployment of these technologies alongside services offered that can help magnify the impact of these technologies, how can this generate impact for actors in the value chain, whether they're at the base of the value chain, producing things, processing, selling, wherever they are, what is the potential of these technologies to generate impact in the value chain? So we'll speak a little bit about how we've approached this through looking at both the technology and the service provision, but essentially we're trying to capture the income generation potential through this measure we've called the Pure Impact Index. Last but not least, we have a final measure that compares the total impact potential created by an organization who has applied to us against the request that they have for funding. So this is our impact cost ratio. And this essentially gives us a kind of idea of how much impact this organization is giving as a function of how much they've requested. So it's almost, again, like a value for money calculation, but according to metrics that we've invented and kind of specialized. So rather than speaking generally about that, let's get into some of the details about how we're measuring this. So many of you, I'm sure, are familiar with the SMAP multi-tier framework for energy access. We have adapted the SMAP multi-tier framework to our own purposes, and we have essentially created some tiers that measure the potential of these technologies towards impact generation. As you can see already, here are the 5 kind of pillars of technology we're working with, and we have tiers A, B, C, and D+. You can see from the bottom, the technologies at tier A are probably mostly going to be used by entrepreneurs, smallholders, individuals without giant holdings. And then when you get into D+, you can be looking at definitely commercial and potentially industrial scale, very, very, very large pieces of technology that can be used to provide services to many end users. So let's look at an example of this, right? When we're speaking about the functionality of the technology, really what we're looking at is what do these technologies do? How do these technologies benefit end users? And we have measured that by looking at this example here. We're using freezers, right? For cold storage negative, you can see here our tier A, the minimum capacity should start at 20 liters, and the fridge should have an indicative maximum temperature of -6. So the average temperature of the freezer shouldn't go over -6 degrees Celsius. You can see as the freezer gets larger and you can store more things in there, the weight changes up to D+, where we've also allowed for some commercial freezers which are not as cold as the smaller freezers are. So we've slightly adjusted the maximum temperature. And the final thing you can note here is if you look to the right of D+, for every additional 0.3 cubic meter, you have an additional weight. So this would mean that this same tier framework can be used to capture a freezer that a fisherman might use at his house, up to a very, very large cold room for industrial fish processing, right? You could have a freezer the size of several rooms that could also be graded on this scale. So again, rather than looking at the input of the energy, which is useful for measuring pure energy access, we're more concerned with the function of the technology itself, as that is understood to lead to the potential for income generation. The other advantage of using a framework like this that is much more geared towards functionality is for those technologies that are more focused on using like raw sunlight. So a solar dryer will have a small panel for the fan, and then the majority of the energy for the drying actually comes from the sun itself, which is obviously a little bit difficult to measure. So we are then looking more at the functionality of the solar dryer. What's the throughput? How much room do you have? How many kilos of certain products can you dry? That is a much more useful income generation potential measurement than just looking at the panel size, which, as noted, is not as good a corollary to the actual effect of the technology deployed. So we have, in short, made customized tier matrices that in some ways resemble the SMAP tier matrices, but are customized to several pillars of technology that we've chosen, and we think that using this is a better way for us to understand the potential of these technologies to generate income in the value chains that they're engaged in. So I've spoken briefly about service, and I can give you a little bit more information about what we mean by this. So I was listening in 2024 to a very good webinar held by Gogla about the end user subsidies for productive use of renewable energy. Carlos Soto was running it, and one of the things that he mentioned in that was he was speaking about how a Google survey was looking at the ways that high levels of repair service, as well as high levels of market access service, could help users of pure technology. So market access in this case means, are you having a market for the products that you make? So let's say you have a solar pump, you're producing capsicum. Is anyone buying this capsicum, right? Can you link a farmer with a capsicum buyer? And then obviously you can get more sophisticated. Is this buyer offering good prices? Does this buyer organize pickup, et cetera, et cetera? But the income generating effects of these services will amplify the potential of the technology itself. So you could imagine two people, one without market access and one with market access. Those people could own the same pump, but their capacity to generate income from the pump might be different if one of the individuals has better access to a ready market than the other. So this got us thinking into how we could build this reality into the tracking of our program. So what we decided to do was, alongside this measurement of the technology, measuring the deployed technologies, its capacity, and its functionality, we decided to directly incentivize the provision of three types of service. So you can see here, repair and maintenance. It's what it sounds like. The most important element of this is warranty provision, so making sure that customers who have purchased or leased a technology are able to use this technology over time. And of course, it can cover other elements like preventative maintenance, uptime, having a customer service line, remote troubleshooting. All of these other elements are covered under there. Market access, as established, this involves the linking of individuals and value chains with potential buyers for their goods, hopefully catalyzing income generation. And last but not least, we have agricultural best practices. So this would be things that don't necessarily have to do with the core technology, but could help an individual produce more. So let's think about a fridge. If a farmer has a milk fridge and she has some cows, obviously the milk fridge will chill the milk and prevent spoilage, but you could also give her some advice about how should she be feeding her cows? How should she be cycling out different types of feeds? What are the best times to maximize milking, et cetera, et cetera. There's many other agronomic factors that could impact the ability of the technology to generate income for that individual and the ability of that individual to kind of maximize their agricultural output. So this is the agricultural best practices, sorry. Last but not least, you can see here, we have made it possible for companies to list capacities in all of these areas, but we will have a mandatory requirement for repair and maintenance. So we are mandating that companies reach a certain level of repair and maintenance to ensure that those individuals who are engaging with their technologies have a certain surety to make sure that these technologies will be working for a certain amount of time. But market access and agricultural best practice, these are optional elements. If an organization wishes to engage in these practices, offer these practices to the end users of their technologies, they are valued positively in our assessment, and they will actually directly impact the level of incentive capital that the organizations can request. So just to give you an example of what this practically looks like, we can look at this agricultural best practice. So many of you know that you could measure agricultural and agronomic best practice on many different valences, variables, etc. We have tried to slightly simplify it, and we've boiled it down to four main headings that we thought were most pertinent to applicant firms. You have provision of agronomic information, extension service inputs, and finance and insurance. As you can see here, we have these four figures and a percentage below. So an organization that has matched two of these four inside a certain category can then attain that category. So let us say an organization has a standard level of agronomic information and a standard level of input provision. That organization would then receive a 2.5% bonus. So to clarify what this score is on the bottom, this score on the bottom listed as percentages is the additional incentive capital that a company can request as a result of this. So essentially, an organization that is offering a very high level of service will be able to ask for more incentive capital for the same technology than an organization with no service at all. We are trying to directly incentivize organizations to offer these services because we believe that it is this combination of service provision alongside technology provision that really lead to the best impact. So those organizations that have high levels of service provision in agricultural best practices, repair and maintenance, and market access can essentially receive more incentive capital for the same deployed technology. And we think that this is an important recognition of the difficulty of some of these service provision. So I want to end before I pass over to my colleague Kumbi with just a blush on how we have tried to design this program. So obviously, like many other programs, we start off with a very heavy analysis of applicant eligibility, right? We're looking at, as noted, their business model. We're looking at how they're able to provide services. We're looking at the technology. We're really assessing their capacity to execute this program. And that's actually a very intensive period that we start off before we go into contract signature. But then we plan to continue to monitor these same elements that we analyzed in the eligibility review and due diligence through the program implementation. So we're going to try to track the same elements, and we're going to try to make sure that these things like service provision are tracked throughout the course of the life cycle of the implementation. Now, it's not to say we're the first organization to do this, but it is, again, as noted, a recognition of the difficulty of providing these types of services. It can be very tricky for companies and their partners and those other organizations that they're working with to do things like organize pickups of agricultural products, provide on-the-ground technical assistance to farmers to help them maximize their yield. All of this stuff is very difficult. So in our estimation, if we're going to ask companies to do this very difficult thing, we should track how this is going over time, and if potential, incentivize them, show them some benefit for this very difficult work that they're going to accomplish over time. So just to say, in addition to taking kind of a snapshot of their capacities at the beginning of the eligibility review and due diligence, we hope to keep a kind of running tally and a live measure of how companies are progressing. And we do believe that with these incentives we built, many organizations will be able to offer more and more services to their end users, offer more and more impact to their end users, and continue to amplify the impact of this deployed technology, the income generation potential of this deployed technology as the program implementation continues. So this was a general kind of overview of our philosophy and refresher on some of the dynamics. I want to hand over to my colleague Kumbi to talk a little bit about our results.
Thank you so much, Andrew. My name is Kumra Makanza. I'm a senior specialist in renewable energy finance at REEEP. So thank you so much, Andrew, for introducing the program and the philosophy behind it. For the next few slides, I'm going to be speaking about some of the results that we had from the evaluation process, which are really giving us some insights with regards to, one, our process, but two, the dynamics within Tanzania. I think the first, we were pleasantly surprised and pleasantly not surprised, but we're quite happy with the turnout. We received 50 applications, of which 38 were eligible. Of that, interestingly, we had 31 local firms and 7 international firms, and the types of businesses quite varied, from agribusinesses to cooperatives. I think one unique approach that we did have at REEP was not just focus on energy service providers, but also agribusinesses, which also deploy these pure technologies. So as a result of our outreach, we're quite happy with getting some applications from both energy service providers as well as agribusinesses. Next slide, please. What was also quite interesting was the geographical distribution. We got applications from nearly every region in Tanzania, with however most projects came from Arusha, Iringa, Morogoro, and Mbeya regions. This is no surprise. Arusha is the most fertile or has fertile soil and has a favorable climate for agriculture. So it has quite an established agricultural sector and famous for things like horticulture, coffee, and bananas. And Iringa likewise has cool climate, fertile soil, and differs slightly with a focus on maize production and having some of the greatest rainfall within the region. So our wide distribution of applications, as well as a strong representation of local companies, was no accident. This was quite intentional. As part of the process, we actually did two market scoping missions to Tanzania, where we went to different cities from Arusha to Zanzibar all the way to Dar, and really trying to understand, what the dynamics were. So I think our outreach, the turnout is a result of the outreach activities that we did, and it was also not just outreach, but the outreach was driven by a realization, in particular, that local companies for far too long have been overlooked by such programs. So one stat that motivated us, I think, as of 2022, there was an understanding that only 5% of off-grid investments were going to local enterprises. However, I think it's widely recognized that these companies do have, the right capacity and do have the expertise and the regulatory approvals towards actually deploying towards deploying the pure technologies that we're looking for. So in addition to the wide geographical reach of the market scoping, we also within our evaluation criteria had several categories that looked specifically towards identifying local businesses. The first amongst which was looking to the extent to which local supply chains were used. So this was assessing, whether local companies, were had downstream effects, whether the local e-mobility company is, producing some of the balance of materials together. So perhaps the kit may come from China, however, it's assembled locally. So we were really looking at, supporting businesses that had downstream effects and that were well embedded within local supply chains. The second, which was also quite direct, was looking at local participation. And in particular, we looked at local ownership and leadership and management. So we looked at these separately to look at the extent to which Tanzanians, in this case, were represented within the ownership, leadership, and management. And once again, with the more than 37 applications coming from local companies, it was quite clear that there were a lot of local companies that were participating and had been there for a very long time, and we were quite happy to see them show interest within our program. And then lastly, we also looked at local experience. So we were looking for firms that had familiarity to the technologies, that has some traction with the local market. So instead of excluding international firms, I think we just wanted to use the evaluation criteria towards supporting firms that were well embedded and with the understanding that very little investment was going to these local firms. And secondly, that our understanding that local firms were in a lot of the times best placed to actually deliver the pure technology to the market. Next slide, please. So in terms of the application, we were inundated. I think the first big number to highlight is that we got more than 21.5 million euros in requests against our total funding window of 2.5 million. So this represents more than 8.6 times of incentive capital available. So it's quite clear that there's a high potential and a high need from these companies. These companies were plentiful, and I think as we grow the program, we saw that there are a lot more companies than the ones that we're currently supporting that would benefit from this funding. In terms of co-financing, we had a co-financing rate of more than 1.33, which meaning that we're able to, there's a high potential to leverage capital. So these companies not only were requesting funding, but also had their own internal funding to complement our funding. Another interesting statistics we found was that a window was between a quarter of a million and €1 million. However, the average incentive sort of hovered around the 600,000 euro mark. So it was something that we contemplated a lot during our design of the window. It wasn't really clear what type of funding was needed for the companies to grow, but it's becoming much clearer that the companies have some level of traction, have been growing to some bit. However, a funding window of around 600,000 is the catalyst that they need. And this sort of differs from different markets that we were contemplating. We may need, we have a slightly higher maturity. We may need, and we may be able to absorb slightly higher funding. So a quick back of the envelope would let you know that with the current resource window of 2.5 million, this would allow us to support 4 projects at present. However, I'd like to stress that the rest of the pipeline is quite strong, and we have a couple of companies beyond the 4 projects we'd like to support that one way or the other we would look to support in the future as well. Next slide, please. In addition to geographical spread, I think it was also quite interesting to find the wide array of sectors that were represented. The chief sector was production, led by irrigation. This is no surprise; it's one of the most mature sectors within the continent. However, we were also pleasantly surprised to also find a lot of applications looking at storage, in particular cold storage and freezing within Tanzania for the fisheries all the way down to dairy. We also had 10 applications within transportation. This is e-mobility, a sector that is quickly growing. There were a fair few businesses that were looking to apply e-mobility solutions towards agri-food value chains. We think that this is quite novel. This is something that we hope to support more and more in the future. And then finally, bioenergy, which is also growing technology, but it was also really interesting to see primarily agribusinesses that were employing bioenergy, for example, briquette making with agricultural waste, all the way to different ways in which the agricultural produce itself could be used to generate energy. So the geographical spread validated our approach to keep a wide window in terms of what technologies we could support. And we've seen that whilst irrigation is quite mature, a lot of these emerging technologies, they're good companies that are already applying these wide array of technologies within Tanzania. Next slide, please. In addition, the value chains were also equally spread. Highest to note was horticulture, some for export and some for internal use, as well as grains. Another interesting sector that's been growing is fisheries and aquaculture. We had a fair few applications there, and then we're just seeing a fewer but growing, which is sort of the cash crops such as coffee and tea. You'll notice that there's quite a lot of different technologies. So some companies were looking to deploy their technologies for more than one sector. However, the wide array of technologies shows how pure technology today can have a wide impact across many value chains in Tanzania. So where are we now and where are we going? So as we've already concluded our evaluation process, we're knee deep within our due diligence process, which we hope to finalize by the end of this quarter, and as well as contracting within this quarter. So the contracting period will then begin this year, running through 2029. So as Andrew mentioned before, the implementation period will not just be us giving funding and watching the companies. However, this will also include us having technical assistance and supporting them within their growth process and having the monitoring evaluation to understand whether they are, delivering the value that we're seeking through the Pure Impact Index and the ICR that we did. So I'll close with the call to action before opening up to the question and answer. So yeah, I think the journey has just begun, but we have a long way to go. But we're really, really pleased with our progress so far. I think the chief amongst which is additional funding. I think we already have a really, really strong pipeline, really good businesses that need funding today. So we'll continue to work with our partners to raise additional funding to unlock this pipeline. And this is the first country of which, and over and above unlocking the pipeline in Tanzania, we would also be looking over this year into the next towards growing this into a multi-country program. The second activity that we will be helping the companies with that we do support is raising co-investment. So we're looking to leverage private capital to accelerate scale. So if there are any funders on the call today, we're open to funders, banks, as well as investors who would want to complement our funding. As we said, we're really confident with the shortlisted companies, and we think alongside the private investment, they will be able to achieve scale. So I think that hand-to-hand approach is one that we're excited to see flourish as we go forward. And then the pure impact index that Andrew was describing is still in its early stages. I think we would like to co-develop and validate the concept and have it one day become an industry standard. So we invite any other partners in the space to collaborate, to share data such that we can improve the pure impact index so that we can get closer and closer towards being an index that measures the income potential for end users. So as we did our best attempt now, from the results of this first program, we will continue to refine it. However, we think this is a scope beyond REEP, so we do invite other partners who are looking to do the same to join us on this journey. And over and above just the pure impact index, I think there's a wider call for research in the space to join bilaterally through REEP, but also through our partners in the Agri Energy Coalition. We would like to have more research so that we can have an evidence base to inform both policy and market design. So once again, I think the journey just begun, but we look forward to working with these companies and with other partners towards achieving the success that we hope. And yeah, a big thank you to everyone here. And I'd like to open up the floor to question and answers.
Thank you, Kumbi. So anyone wishing to ask a question, please feel free to type it in the chat. And we have received one so far. John said we received no feedback in addition to the whole application also disappeared from the application platform. John, thank you for this. Let us follow up with you separately on this. I don't exactly know what occurred there, but we'll be following up on this. So well noted. Does anyone else have questions for Kumbirai or myself about anything discussed here?
Just for John, I think we haven't given any final announcements to anyone, so the process is still ongoing. But you should have some feedback in terms of the status of the application. So we'll work on that.
A question from Alex. How will you know if you've been placed in the waiting list for additional funding? As Kumbirai has outlined, we'll be communicating out soon as we're still in the midst of our application process and application review, I should say. We'll be communicating soon about those organizations that have been waitlisted or will not be eligible for funding in this round. Thank you, Sarah, for the comment. To the anonymous attendee, I'm interested in collaborating on the PII. Where do I reach out to? Good question. So I think the best address to reach us at is the address pure@reep.org, Pure at symbol reep.org. That would be the best place in which to reach out. And to the anonymous attendee, please do so. We're always, as Kumbirai noted, interested to have collaborators and people who are keen and interested and engage in this space. So don't hesitate to reach out at pure@reep.org. Is there any other comments or questions from anyone online? Ah, Vincent. Regarding the additional incentives, is the technology provider's payout determined by the farmer's success in implementing the additional service, advice, or training provided? Vincent, that's a good question. Essentially, we're looking more at the ability to provide the services. I mean, there will be variance, of course, in individuals' interests and services, capacities to take them up, willingness to engage with these elements. So we hope to take a view that encompasses the complexity of actual intervention, that balances the fact that every individual, every end user is different. So to kind of sum it up, it'll be more on those elements offered, understanding that companies should, and I'm sure will, be making their services as accessible as possible to the largest number of their potential end users as reasonable. So, of course, there's always going to be individual choice, and there will be not necessarily any penalties for that. It's more of the holistic view of what is accessible to people who are wishing to engage with this. Um, Alex, from this experience, will there be a second call in the next 2 years for applications, and will that be Tanzania only, or are you looking further? Alex, it's a very good question. As Kumbirai mentioned, we're currently looking to expand the Pure Growth Fund. We have discussed options both inside Tanzania and outside. Obviously, as Kumbirai mentioned, we see significant demand in Tanzania, and there seems to be a large group of interested and qualified applicants there. But of course, the potential to engage in other markets and to bring this approach is also extremely interesting to us. So this is not much of an answer to you, but it will be dependent on the partners we're able to attract and interest from potential funders where they wish to see this type of impact.
Yeah,
Makanza
happy
mentioned
to take.
Arusha. It's a fertilizer. Yeah, please come.
Yeah, I'm
Come
happy to
please.
take this one. So, sir, I think I think those were meant to be examples. So, for avoidance of doubt, the Pure program is looking at the whole of Tanzania. Our market scoping, as you mentioned, looked at both mainland and Zanzibar. So, it is looking right across the whole of Tanzania. And we just highlighted Arusha as Aringa as places where we got a fair few applications. However, the Kilimanjaro region is one that is indeed interesting. So we don't have any preferences in terms of regions. And in fact, the wider the region choices, the more impact that we see. So over and above Arusha and Iringa, it would be desirous for us in the program to see applications of these technologies over and beyond, the major hubs. So in short, the fund is looking at Kilimanjaro presently, and is one of the regions that we would be happy to find applications from. And if I'm not mistaken, we already did have applications for companies that are active in Kilimanjaro already. Hope this answers your question.
Does anyone else have a question that they're still typing? If you're still typing and want some time, please raise your hand. Oh, here we go. Kartika, when is the project initiation? Kumbira, you're going to take this one.
Yeah. So as we mentioned in the application, that we're already concluded with the evaluation process, and we're currently doing the due diligence process, which is quite advanced and which we'll finish within this quarter. After which we'll do the contracting. So by the end of this quarter, yeah, looking at around March, April, we should be having signed contracts, and then the project initiation will be for 3 years commencing of that period. So we'll be working hand in hand with these companies over this period. I have a small detail, I guess, which is that we're calling it the first window. So this is we vision having multiple windows running in parallel. So this would allow the first four companies to be supported. However, we'll be actively working in the background towards developing the next window, which should run before the end of the next window of the first window. So I hope that answers your question in terms of project initiation.
Receive a recording of the webinar. Aaron, I think you are the person to answer this.
Yes, we will be sending out an email with a link to the recording of the webinar after this to all the participants.
Thank you very much. I think we're reaching the end. Does anyone else have any final concluding comments or questions for us? Good. Then I would like to thank you all for your time. Thank you for hearing about our progress, and thank you, Kumbarai, for closing us off on this. Any final comments to send us off, Kumbarai? You're going to lead us out.
No, I think a big thank you, and I think yeah, would like to leave you with excitement. I think we're really excited with where we are today. So I think this is definitely not the last you hear from us. So we hope to have many more of these as we share our progress along the way. And once again, I think we'll end with the call for collaboration. So whether through funding or through different partners, I think yeah, we look forward to working with more companies in Tanzania, more partners from across the globe, and yeah. I'll end by another final big thank you.
Thank you all.